I do need to touch on some of the risks associated with investing in the stock market. Now, if you're the type of investor that likes to just jump in and start investing without doing your research first, there's a big chance that you will lose a little bit of money or even a lot of money. Now, you might be listening to your friends or family members that give you stock tips without doing your own research. So, for example, there's a hot stock that everybody keeps talking about. Even the news brings up that stock. And I'm going to pick on one, Tesla. So, your friends or family members come up to you, they tell you, go ahead and buy Tesla. It's a hot stock. It's going to keep going up into the near future. So, you get hyped up, you put some money into buying the Tesla stock, and after a month or two, the stock declines, you panic because you're new to investing, and you sell. You just lost a little bit of money, even a lot of money, depending on how much money you invested into the stock. Or another scam, there's a lot of scammers out there. One scam is called a pump and dump. So a company or a group of people, or even one person, they might advertise a particular unknown company that's gonna blow up to a bunch of investors. These investors start to invest in that stock, pretty much pumping up the price of the stock. When the stock is trading at its highest, those scammers now that advertise this particular stock sell all their shares, in essence dropping the value of the stock, dropping it up to a point where it's worthless, and now you can't sell it, you can't do anything with it, it's worthless, so you just lost a bunch of money. So there's still a lot of scams out there that you have to be careful with. But on the flip side, not investing in the stock market is also a risk in itself. And I call this the inflation risk. So you might meet somebody that tells you, well, I'm not going to invest in the stock market. The stock market is a scam. I don't believe in it. I'm just going to put all my money under my mattress. So they might have 10K saved up. They tell you, okay, I'm not going to invest it. I'm not going to put it in my savings account, whatever. I'm just going to put it under my mattress. That's a big risk. And I call this, like I said, the inflation risk, because your money loses value every single year. If you think about it, if you go to the store now and you buy, let's say, a pack of chewing gum for $1, a year from now, that pack of chewing gum is probably going to be $1.03. So it just increased 3% in price, which is inflation. So the money that you have now will not be able to buy the same amount of goods and services in the future. If inflation is 3 to 4% on average, that means that your money loses 3 to 4% of its buying power every single year. So if you take that 10K now, a year from now, your 10K can only buy $9,700 worth of goods and services because of 3%. 3% of 10K is $300. If you take that 10K and you take the average of 3% inflation, after 10 years, that 10K only has a buying power of $7,300. So inflation is something that you have to think about also.